You know, everyone is always looking for that one secret strategy, that one trick that turns a tiny trading account into a massive one. But here's the thing. The secret isn't a strategy at all. It's a mindset. We're about to break down why turning $100 into a million isn't magic. It's a mental framework that you can start building, well, right now.
Okay, let's just get this out of the way. It's a pretty brutal statistic, but it's the truth. A staggering 90% of new traders fail. They blow up their accounts, they lose their capital, and they quit. But the reason this happens is almost never what they think it is.
So yeah, that's the big question, right? Why? If it's not about finding the perfect indicator or some secret chart pattern, then what's really going on? Well, the real answer is much, much deeper, and it starts the second a new trader puts money into their account.
See, there's this huge disconnect. New traders, they blame their tools. They say, oh, my charts were bad, or I used the wrong indicators, or the classic, I just didn't have enough capital. But the real reasons they fail, they're all in their head. They're caught up in this quit my job next week fantasy. They're thinking in terms of days, not decades. The entire mental foundation is just flawed from the start.
Okay, so this brings us to our first core principle, the power of a seed. This is all about completely reframing how you look at that small account. It's about mastering what we call the compounding mindset.
And this, right here, is the critical difference. A professional sees their capital, doesn't matter if it's $100 or a million, as a seed. And what do you do with the seed? You don't gamble with it. You plant it, you project it, and nurture it. The amateur, on the other hand, just sees a pile of cash to be risked for a quick win. They're just hoping for that one lucky trade. And that one single shift in perspective, it changes absolutely everything.
And this is exactly where most people get tripped up. I mean, think about it. A 5% weekly gain on a $100 account, most people would just laugh at that. It sounds totally boring, almost pointless.
After all, what is it really? $5. You can't even buy a fancy coffee with that in most places. But this exact way of thinking is the trap that keeps small accounts small. Because when you dismiss that $5, you're missing the incredible power of what it can become.
But just look what happens when you respect that boring 5% gain and you do it consistently. Suddenly, time becomes your superpower. That little $100 seed, it grows to about $1,400 in a year. By year 2, you're looking at nearly $20,000. And in under 5 years, you're well over $100,000. All of that from that pointless $5 a week you started with?
So this really creates two completely different ways of operating. The gambler is always swinging for the fences, trying to hit a home run. They'll risk half their account for a quick double. You know what happens? 2 bad trades, and they're completely wiped out. The professional? They're just focused on getting on base, day after day, with those disciplined, small gains. They let time and compounding do all the heavy lifting for them.
All right, our second cornerstone is what I call the shield of patience. Now, this isn't about sitting around and passively waiting. No, this is an active, powerful, defensive strategy. It's recognizing that sometimes the best move you can make is no move at all.
I really want you to let this quote sink in. Not trading is also a trade. Think about that. Every single time you see a mediocre setup and you choose not to click the button, you're actively protecting your capital, you are making a profitable decision by simply avoiding a probable loss.
You have to understand, the market is practically designed to make you feel impatient. Every little tick up, every little tick down. It's like a whisper in your ear saying, hey, act now, you're going to miss out. Your impatience is the market's greatest weapon against you. And your patience? That is your shield.
So, how do you actually build this shield? Well, it comes down to cultivating emotional detachment. You have to burn these rules into your brain. First, see losses for what they are, a normal cost of doing business. They're not personal failures. Second, never ever tie your ego to the outcome of one trade. And third, you have to avoid revenge trading at all costs. Your only job is to execute your process perfectly. The outcome doesn't matter.
Here's a great way to think about it. Imagine you own a restaurant. If a customer cancels an order, what do? You don't get angry and burn the whole place down, right? Of course not. You just accept it as a small, expected cost of doing business, and you move on to the next customer. That is exactly how you need to view every single trading loss. This brings us to our third cornerstone, the flow of adaptation. The market isn't some static, predictable machine. It's a living, breathing, constantly changing environment. And it rewards the people who can move with it, not the ones who try to fight it.
Now, this is a trap that so many new traders fall into. They confuse consistency with stubbornness. See, consistency is good. It's about having discipline and applying sound principles. Stubbornness, though, that's clinging to a failing strategy just because the market isn't doing what you want it to do. It's your ego insisting that it can't possibly be wrong.
The professional approach is to think like you have a toolbox. You wouldn't use a hammer to fix a leaky pipe, would you? It's the same in trading. Step 1, identify the market conditions. Is it trending hard? Is it choppy and going sideways? Step 2, pick the right tool, the right strategy for that job. And then, here's the key. When the market changes, you have the discipline to put that tool down and pick up the one you need now.
And really, that's the bottom line. A rigid, stubborn trader will eventually get broken by a shift in the market. It's inevitable. But the fluid, adaptable trader, they get carried forward by that exact same wave of change. Your goal is not to fight the current, it's to learn how to flow with it.
Okay, so let's bring all of this together. If you're starting out with $100, I want you to completely change how you see it. Stop viewing it as a limitation. In fact, that small account is the single greatest asset you have. It is your perfect training ground. Think about it. A small account is the perfect place to master these cornerstones. It's where you can really learn the compounding mindset, where you can forge that shield of patience, develop true emotional detachment, and practice the flow of adaptation. And you could do it all in a low-risk environment where mistakes won't wipe you out.
Ultimately, that small account is your personal boot camp. It forces you to develop the discipline and the psychological toughness that you're going to need to manage a much, much larger portfolio someday. You can't learn those skills when the pressure of 6 figures is on the line. You have to forge them now while the stakes are low.
So, I want you to burn this idea into your mind. Stop wishing you had more capital and start seeing what you have as the perfect tool for the job right now. Your small account is not a limitation, it is your greatest asset.
Now, to finish up, I want to ask you something to reflect on. For those of you who are on this path, what has been the single hardest mental shift you've had to make in your own trading journey? Drop your story in the comments below. I'm genuinely curious to read about your experiences. I'll see you there.